All right, so guys, I think that we are ready to go. So first of all, I wanted to thank you for attending the stream tonight. I'm very happy to spend time with you guys, and I'm very excited to show you the Elliott wave theory. I'm gonna try to put some more stuff in the presentation. And what I suggest is keeping the question for the end. I will have remaining time at the end for the questions, so don't worry about that. We should have enough time. And as I said, I have a pretty bad. I'm kind of sick, so I have a bad cough. So I'll try to mute the GoToWebinar as much as I can, since it's recorded, and for the guys in Discord, well, I'll do my best to cover the mic if that happened, okay? So bear with me, and I think everything is gonna be all right. Okay, so we got about 25 people overall watching the stream. I strongly recommend that you guys participate in the stream, because Elliott wave theory is something a little bit tricky to understand, and the best way to do so is by following someone that masters it and asking questions and trying stuff. So okay, I'll try to guide you along the way, and I think we should be good. So for those that do not know me, my name is Frank Turgeon. François is the real name here. Frank is the English name. I'm a French Canadian, so this is why you're hearing a strong accent right now. So you gotta get used to it. I'm a chartist at Eagle Investors. I've been with the guys for, I would say, 2 years, and it's been overall a very, very, very nice experience. So I'm very proud to be part of the community and very happy to be here tonight. So here is our roadmap for tonight. I want to start really soft with you guys. I know that there's a lot of you guys that are working with TradingView as their main chart software. So I'm gonna try to give you some hot tips. And when I say hot tips, it's only little things that makes you so much quicker navigating TradingView. And I think it's gonna make difference in the way you build your setups. And I think it's gonna make it a difference in the speed you're gonna develop when you want to watch multiple time frames and you want to check different indicators without having a too much crowded screen. After that, I'm just gonna throw at you how I finally find a strategy that was working for me. So just the big bullet points that led me to defining the strategy, and it's no wizard thing. It's just a common sense reminder that I want to share with you. Then we are gonna go with the Elliott wave theory. There's gonna be some well, I would say knowledge about it. So it's gonna be maybe a little bit hard to understand at the beginning, but you're gonna see that everything will go smoother once we start to chart together. And you can start asking questions at when we're gonna start charting. You guys can ask questions and I'll be open to them. And at the end, we're gonna do a wrap up and questions. So let's begin with the TradingView hot tips. Okay, first of all, guys, I'm probably sure you all know that, but in TradingView, you have seen me using TradingView, and I do have a screen that I use for day trading. And as you all know, I'm mastering the more longer term vision of the stock market. So I would say daily and above. So basically, everything that is daily, weekly, and monthly, this is what I use Elliott charts on, and other indicators for the long haul. But one hot tips that is very useful in TradingView, guys, is if you right click on the thumbnails on the top, what you can do is you can add a color code here. And what it does is that it links your windows. your thumbnails in TradingView. So basically, it allows you to, if I put everything here in blue, and I know that here is my 1 hour chart, here is my daily chart, and since it's blue, when I'm using my intraday window, if I click on the Netflix here, it will automatically populate the 1 hour and the daily. So basically, you can go really fast. You can click on bottom left Tesla. You're going to have the hourly on Tesla. You're going to have the daily on Tesla. You want to have Microsoft that is right here. You just simply click and it will update on the other screens. So it's very useful to navigate faster in TradingView. Then you have the custom drawing pan. A little bit further out tonight, I'll show you exactly what you should have on your drawing pan when you're using the Elliott wave theory. But that thing is the one that will save you the most time when it's time to chart. Okay, so basically, you will find it on the left of your screen. You have all the drawing tools, and what you do is you add a star here on the drawings that you guys like to use. Okay, once that is done, you click on the star right here, and this little gal will pop up. Okay, and basically it will contain everything that you highlighted with a star. So if you're someone that use a lot of horizontal ray trend lines and rectangles just to stay, just put it there, pop it out, and take it and put it at the bottom of your screen, right on top of your either Mac or Windows quick launch icons. Okay, so this allows you to just, in a simple click, have access to all your drawings. And remember, guys, in every kind of drawings that you're doing, the last configuration that you output, so if you do a trend line and you put it red and you put it thick, the next one that you're gonna build is gonna be based on the last one you did. So if the last one was red and it was thick, it is gonna be red and thick. But in the end, if you want to be even quicker, what you can do is, let's say that you're using Ishan strategy, okay, for the intraday, and you want to highlight lows and highs. You click on the horizontal ray here, you click here. When you double click on it, you can save template. So I know that this is a price target, and it's gonna put price target on the right here. It's gonna be green, it's gonna be thick. And if I say, no, it's not the price target, it would be the stop loss. Well, it will go automatically. So it kind of standardize everything and make everything looks very professional. That's another tip. Another one is the custom timeframes shortcuts. That's very easy. Right here, top left, you have the timeframes. And if you select, you put a star on the timeframes you want, it will automatically take it out and put it definitely on your screen. So it's faster if you are someone that uses multiple time frame to have one click in between each of them. And you can add whatever you want here at the bottom of this dropping menu. You can put whatever you want. If you want 3 minutes, you can add it. If you want 7 minutes, you can add it. So it's pretty useful in my opinion. The indicator templates, to me, has been a game changer. So basically what you do is you like to have indicators, but you're all aware that you cannot use too many indicators on the screen, and that it just put too much noise. So what you can do is right here, you got like the 4 little squares here at the right of the indicators. You can click on it and you can do save indicator template, okay? I'll call it this one 11, okay? And when you come here in the same menu, you can put stars too. And when you put stars, it would highlight here. So basically I can hover in between all of the indicators built that I have in one click. And when I want to get back to 11, which is right here, I'm back there. You know what I mean? You're all aware double clicking on the screen in the middle of the empty field will remove everything that is below, and double clicking it back will automatically put it back on. So if you have RSI, MACD, stochastic, you can magnify your view by double clicking anywhere. And the last point I wanted to share with you is use this function, okay? Copy setups to save time. It's very useful, so you should use it. When you have a setup that you use, you just go here, you click the arrow here, and you make a copy of it. So basically, it allows you to duplicate this view here and work from there. So if you like everything, if you like how you set it up, the margin, how you set it up, the candle colors, the background, so everything that is proper to the chart that you're seeing, you can just duplicate it and work from it for new set of indicators. So it's really fast. Okay, I did not want to spend too much time on this. The topic today is Elliot waves, so I just wanted to give you that. Then I wanted to give you just the big top lines that I use when it's time to find the stock that I'm gonna trade with Eagle. Basically, it's pretty easy. You are all aware of that. So let's go quick. You need stocks that have enough liquidity. I won't repeat it enough. Do not trade stock that doesn't have liquidity. You're gonna be stuck in a range. And even if you think that you have a super good deal on, let's say, leaps for 2024 on a given stock that is unliquid, maybe you're not even going to be able to sell that premium. Okay, so always trade very liquid stocks. Of course, optionable if you want to use that. If you want to play leverage, big market cap bring you back to liquidity. Make sure, and those are the two most important. Make sure to know if they have ERs if you're swinging. This is ridiculous how many time people get caught in that, and we can repeat it. It's going to happen again. And make sure to read the news when a stock is moving, just to know what you're dealing with. Okay. So that's it for the hot tips, guys. It's nothing too shabby, but I just wanted to share with you. Okay. So the Elliott wave theory, guys. Some people talk about Elliott wave theory and Fibonacci levels. And what you need to understand is that both are the same, okay? The only thing that makes, well, that joins the Elliott waves with the Fibonacci levels is that the Elliott waves tries to understand how the Fibonacci levels should work, okay? So basically everything that you will see tonight in the Elliott wave theory is based on the Fibonacci levels. And you're all aware of that. Fibonacci levels are from the golden number. And basically, they are numbers that have a high interest over computational transferring and algorithm. So basically, these are numbers that are everywhere and that predict natural movement on Earth. So you can find it, and I'd say anywhere. You're gonna find the Fibonacci numbers in everything that is in the nature. Even if you look at the butterflies, you're gonna see patterns and stuff like that. So I mean, it's really present and it's really here. So we better work with it. So what is the Elliott wave principle? So the definition itself is that it is a form of technical analysis that finance traders use to analyze financial market cycles and forecast market trends. Okay, so basically you use the Elliott wave to try to understand the past so you can predict where a price movement could go. Okay, so basically what it does is that it's a representation of the collective trader psychology. Okay, so a form of crowd psychology. So basically what it cycle the natural mind of the human, so the investor, to try to determine where is it in what state of mind he is in terms of when a news come out, you all have seen like the Simpsons episode with Homer when he I don't know, I think he just learned that he had cancer, and he goes through like all the 7 phases of acceptance and crying and getting better and then being mad and then uh, moving further in the 7th process. So that is exactly the same thing. Okay, so people will react the same with news that comes out for companies. So there's going to be a lot of excitement at the beginning, then there's going to be a little bit of a jaw down, then you're going to have more serious investors that will want to kick in, so the price will go higher, and then you're going to have people that will take profit bringing it low, and then you're going to have the people that are always show late that will bring the stock up, and then you're going to have the fall because no stock goes up forever. So it's going to do cycles like that. Okay, and when I say cycles, it's always the same with the Elliott waves. Okay, it's pretty easy to understand at first. Elliott waves, first of all, are as valid in a bull market than they are in a bear market. So everything that I will do tonight, it will be based on the bull market, so a price that goes up in time. But the same applies and the same rules applies if we were to enter, let's say, an extensive bear market and you wanted to apply, it would work. Okay, so basically you have 2 types of waves making Elliott waves. You got the impulsive waves, which are wave 1 here, wave 3, and wave 5. So basically, when you hear me saying, okay, this is an Elliott wave, what you want to watch is you're going to have a wave 1, which is an impulse. You're going to have a wave 2, which is a corrective measure. Then you're going to have a wave 3, that is an impulse. A wave 4, that is a corrective measure. And the final wave, the 5th wave, that will lead to the upper time frame wave 1. So that's right, okay? The principle behind the Elliott wave theory is that the market repeats himself, whatever the time frame is, and every wave, every set of wave, 1, 2, 3, 4, 5, is the minor of the wave above. So what I'm telling you guys is, if we take this out of the screen here, and I tell you, okay, here guys, we got a first wave, okay? So the line I'm holding in my hand right here is the first wave, okay? What I mean is, let's pretend that this line is on the daily time frame. What you see underneath it would be the 1 hour time frame. So the wave 1 on the daily would be composed of 5 waves on the 1 hour. So 1, 2, 3, 4, 5, making the daily. And if, let's say that this one, the daily here gets the wave 2 here, and we duplicate those, okay, for wave 3 and wave 4 of the daily, you complete it with a wave 5, what you get? You will get a first wave of the weekly. So it's like the Inception movie. You always have a set of 5 making a wave 1 higher. A set of 5 making a wave 1 higher. I hope this is clear to you guys. And just to bring the noise out of the chart here, I just want to show you this screen here. I'll magnify it just for the purpose of tonight. Let me take a shortcut here. So what I'm telling you guys is this wave 1 here can be break down in 1, 2, 3, 4, 5 wave on the lower time frame. This little wave 1 here can be break down in 5 waves of the lower time frame. 1, 2, 3, 4, 5. And the numbers that you see here is the relation in between the first wave here and the equivalent here, but with 2 breaks down below. So basically it's 15 15 impulsive waves and 6 corrective measures. For the corrective measures, they will always be wave 2, wave 4. And those waves are the one that are named ABC using the alphabets. So let's say that someone tells you, okay, we are in wave 3. Automatically, you guys should know and should be aware that a wave 3 is an impulse, and it should be going up if, of course, it's the Elliot wave is used in a bull market. But to be honest, everyone uses it in a bull market, so to the upside. So it's going to be the first thing that should come to you in your mind is that. So wave 1, wave 3, wave 5 to the upside. Wave 2, wave 4 to the downside. And making the wave 2 is ABC. So if we take our chart back here, you got a first wave made of 5 waves. You got a second wave made of 3 waves, A, B, C, which is a corrective measure. You got the third wave made of 5 smaller waves, 1, 2, 3, 4, 5. You got the fourth wave made of ABC pattern, so A, B, C. And you got the final wave, the smallest one, wave 5, with still the five increment, 1, 2, 3, 4, 5. Does that make sense to you guys? I'm waiting for the answer in the stream chat. I don't have any, so I guess everyone is okay with it. Am I gonna have to to point people? Flights. Oh, you were writing flight school. Does that make sense to you? Okay, so what did you not understand flight school? I'm gonna try to do it once again, and it's not that easy to to build in your mind, guys. Okay, so I'll do it once again, but you're gonna see it's gonna be a lot faster and easier when we are gonna draw together, and I keep 30 minutes for that, so you will understand. Oh yeah, we are gonna do example Oregon. Okay, you do not worry about that. So what you need to understand, guys, is that you got 5 waves in the Elliott wave theory, and each of these waves can be break down to lower time frames. I'm not sure I follow you, flight school, when you say, are these S curves? These are no splines. These are, Elliott waves are based of linear lines, straight linear lines. There's no curves, there are no polynomials or anything like that. Okay, so basically, guys, just remember that every wave, every impulsive wave, wave 1, wave 3, wave 5, can be broken down to 5 smaller waves. Every corrective waves 2 and 4 can be broken down to 3 smaller waves, A, B, C. I think that practice is gonna make it easier. But bear with me, guys, okay? Because, well, that was the easy part, okay? So if you did not follow quite well on it, okay, I mean, the stream is going to be available. You're going to be able to watch it again. I'm always there to answer questions, and we are going to practice tonight. So I think everyone here will be able to understand the principle. Sorry about that. Okay, so when I was saying that the Elliott wave uses the Fibonacci levels, it's only because the only way to predict the future in the stock market, there's only one way you can predict some sort of, let's say, important resistance ahead or important support ahead, and it's by using the Elliott wave theory and the Fibonacci levels, because there's no indicators that will tell you, like, if we take as an example Microsoft, which is doing all-time highs over all-time highs for the past years and years and years. Of course, it gets correction, but I mean, the stock goes up, and apparently it will always go up in coming 20, 30 years, okay? The only way to predict where the stock could reverse at some point in, let's be honest here, no man's land, because let's say that Microsoft did not reach a price target. You cannot know where it could turn around. You know what I mean? So if we take the weekly chart on Microsoft here and we enhance it, let's say that I want to know where it could lead in the future above 351, but it's impossible because it had never been there. And what Fibonacci levels allow you to do is to quantify where it should meet resistance based on its strongest impulse. So basically what it would do, if you take Microsoft and you put it on, let's say, the weekly time frame here, okay? So I'm in between 2009 and 2021. So we have a price here of, let's say, 15 bucks. And we have a price here at the top of 350, okay? So would you guys agree with me that after the year 2000, that would be the lowest and that would be the highest point? I think everybody agree with me on that. So that would be the major impulse that we could see on Microsoft. And what is very nice is that the Fibonacci levels allows you to predict where the algorithm that are built in the trading computers used by the money makers and the money and the institutions and everything is the Fibonacci levels are almost the only variable that will allow them to have some kind of predictions. So you can be sure that they are coded with it. And basically, when you're going to put the Fibonacci levels from that low of 15 bucks to the high of 350, when you open the Fibonacci retracements, it will allow you to see past current price action on the given Fibonacci levels. So for those that are not aware what Fibonacci levels are, you have 5 of them, okay? I'm not counting 0 and 100, of course. So you have 0, you have 23.6% or 0.236. You got 38.2% if you're on a 100 scale, or 0.382 if you're on a one scale, 1.0 scale. You got the fib 50%. You got the fib 61.8 and 78.6. Now that you have this, none of them, you will never see any other numbers than those 5 in the Fibonacci theory, okay, for the stock market. So 23.6, 38.2, 50, 61.8, 78.6. And now what you're wondering is, why is Frank talking to me about the Fibonacci levels? When 5 minutes ago, he was talking to me about Elliot waves. Well, it's pretty easy to understand. We are going to use those Fibonacci levels to predict where the waves of the Elliot theory will meet. So basically, I'm going to show you where a wave 2 should reverse, where a wave 4 should reverse, where a wave 3 should go and meet resistance, and where a wave 5 should go and meet resistance. And those speculative areas are based from the Fibonacci levels. So basically, bear with me. There's going to be a little bit of hard stuff here, and then it's going to be easier, and I'm going to do example for a good 20-30 minutes, okay? Sorry for the cough. Let me take a sip of water, guys. I just want to do the breakdown here. That will link the waves and the Fibonacci levels. And basically, one thing I want you guys to remember is that you're gonna hear about Fibonacci retracement and Fibonacci extensions, okay? These are the same. The only difference is that a retracement will happen when you point from a low to a high, so an impulse will retrace at a level and then move higher. An extension will only be a prediction of that wave, of that low and high. So that impulse, the extension Fibonacci will be a prediction. So it's going to be the same levels, but above 1. Okay, I'll show it to you. So basically, if you break down the 5 waves making the Elliot waves, you got the first wave I said was an impulsive wave. Where the first waves, guys, are impossible to detect. You cannot detect them because you don't know that they exist when they are forming. Okay. The wave 2 is pretty easy to see because when you have the, I won't read all of that. I don't want to bore you to death. But the wave 2 will always happen in a bull market, will always happen after the big news. So you got the Elon Musk saying, okay, guys, we are going to do a stock split on Tesla. Boom, you got a major impulse on the chart. That would be a wave 1. And the wave 2 would be the correction, the retracement of that first wave. Wave 2, if you want to predict where they should land, they should always reverse in between 78% and 61% fibs, okay? Could they reverse at 50%? Of course they can. I mean, this is no rocket science, okay? This is no, not rocket science, but this is no exact, if you're trying to find the exact penny pincher stuff, do not use Elliott wave. It gives you where it should turn around, okay? So basically the wave 2, you should have a major reverse, okay? So I'm just gonna do this here. And I want to draw it with you guys because this is gonna be easier for everyone. And then we are going to go on charts and on real stuff, okay? So basically what I'm saying is you got a wave 1 here, boom. You're going to have the wave 2 here. So you got the huge news, okay? Tesla stock split, boom, the stock skyrockets. Then it have a correction. This here should land at around 61.8 and 78.2 retracement of the green impulse. Once it reverses, market have settled down. So everybody digested the news. Some people took profit. Now the real investors, the big investors, are thinking of getting back in for the second wave. The second wave, guys, is the largest, always. So the second wave should always be the longest wave of the impulse wave. So if you have, so if this is the first wave, okay, this one, the second wave should be this length minimum, but usually it go higher. And guess where it could lead? Well, it could lead to the Fibonacci extension of the first impulse. So it could lead to not the 100 here. It could lead to 123, 150, 161.8, 178.6. So it could reach every extension of the same numbers above 100 from the same start. Then you would have the wave 4. Okay, so if we come back here to the summary that you will all have, the wave 3 is kind of obvious, okay? Because when it's happening, you don't know that this is a first wave, it's just going up. Then it have a corrective measure. It turns around where a wave 2 usually turns around. Then you have an eyebrow lifting and you're, okay, we could be making wave 2 low and we could go higher for the wave 3. And then you see the price action moving and it goes higher than the top here, so it breaks out. You know that you're in a wave 3 because of the wave 1, wave 2, good retracement, higher than wave 1 high. You know that you're in a wave 3. So basically, you know that the stock is going up and should keep going up. Okay, of course, it's gonna have increments in it. So basically, you're gonna have wave 1, 2, 3, 4, 5 making it. So it's not gonna go straight up. And once it reach the wave 3 targets, you're gonna have algorithm that will start selling to take profit, okay? And when this happen, well, you're gonna have the wave 4 that will kick in. Wave 4 is pretty simple. It's the same as wave 2, it's a corrective measure. The only difference is that here we got a huge news. So the stocks went up way too fast. So the retracement is more violent. Then we got more serious investors. The retracement will be not as violent as the wave 2 retracement. This retracement, wave 4, should turn around. It should find its bottom in between Fib 23 and Fib 38. Okay, so we said that wave 2 should turn around 61.8 and 78.8, 78.6. Wave 4 should be in between 23 and 38. So a shallow wave 4. And then comes the wave 5th. The only thing you have to remember, guys, about the 5th wave is that it's always the shortest one. And it will be the one that will sell off on a bigger scale, since if you remember what I told you, once you have completed wave 1, 2, 3, 4, 5, you get the first wave of the higher time frame. So if what we did in the past 5 minutes was the 1 hour time frame, 1, 2, 3, 4, 5, the beginning of the first wave on the 1 hour and the top of the fifth wave on the 1 hour should be the low and the top of wave 1 on the higher time frame. So let's say the daily. I hope this helps you guys. Now it's gonna get easier, okay? A lot of theory, you have to be a lot of concentration. I know it's almost 9 o'clock for the people Eastern time. So now it's gonna be easier. What I did that here is that I built that in TradingView on an empty chart, so no tickers. So basically, if we summarize everything I told you about the Elliott wave, this is the chart that you guys should be looking at. I'm putting it in the stream chat here, guys. So you're gonna have a better resolution, okay? If you want to save it, save it. And if you want to have a very better resolution, right click and open link. If you, it's not that great, huh? So you know what? We are gonna do it together and I'll share, I'll give it to you on a very high resolution, okay? I thought it was better than that. Okay, so let's see, guys, what we just said, okay? We said we should have, give me a second, I just want to make it darker so you see. Okay. Okay, let's go. So we got a first wave, we got a second wave, we got a third wave, a fourth wave, and a fifth wave. What I told you, we use the Fibonacci levels, okay? This is our first impulse, okay? So automatically the fib will draw. So I clicked the bottom and the top, and you see the fib levels. So you got 23.6%, 38.2, 50%, 61.8, and 78.6. What I told you that the second wave should turn around in between 61.8 and 71.8.6. So this is the area where our line should turn around. This is where the stock should find support. So let's say that it finds support, it moves here. What you do is, sorry guys, I need to take a sip of water. What you do is, when you see that it reversed in this area and that it break this high here of wave 1, you know that you're in a wave 3, so you know that it should go higher from here, okay? And where it should go, oftenly, what is coded in the algorithm is a wave 3 around 61.8 above 100, okay? So basically what you see on my screen is minus 61.8 because it's, let's say, the opposite of that 61.8. So from here to this point, that is the same, you know what I mean? So it could reach that. Can it go higher? yes, it can go higher. And what you need to watch first is it will always be longer than the first impulse, always. So if you have, let's say, a wave one that is $100 to the upside, the wave three should be at least 100 minimum from wave two low above. Okay. Then you got the wave three, and it reversed into wave four. Two things to remember, guys. Remember, two things about wave four. Wave four should retrace at 23.6, 38.2 fib retracement, and not retracement from the beginning, retracement of wave three, which is this low after wave two and its own top. So you take the square here and you adjust it to match 33.6 and 38.2 fib level retracement. So this here should turn around somewhere here. And then you got a final wave five that will go higher. Let's say here. And what did I tell you guys? The fifth wave should always be the smallest one and the one that you don't really want to trade, because institutions and the algorithm perfectly know that they are in the fifth wave, and they know that the corrective measure will be bigger, since when it's gonna drop down, it's gonna be the first wave of the big higher time frame chart. Okay, so here, and somewhere here. Let's go back to where we were. For the ABC corrective measures, guys, it's the same. You can click on the automatic ABC pattern here on Elliot on the trading view. If you're wondering why I took those, I'm going to show it to you in a few minutes, but they are right here. Okay, so when you click on this icon, the little arrow here, you're gonna have no, sorry, right here, the Fibonacci sign here. Maybe you have pitchfork or whatever, but the third one from the top, if you click the little arrow, you're gonna have fib retracement, and you're gonna have a lot of stuff here that can be used. You put the stars on it, and if this star here is highlighted, it's gonna be in your pinned floating drawing pan. So I have it here. And the ABC corrective measure, guys, where it goes from here for the wave two. So from the wave one high, it's gonna make an A, it's gonna make a B, and it's gonna make a C to wave three. Same thing for wave four, A, B, C. And if you want to have, let's say, the general logic in drawing the corrective measures, you want to predict the price action, they usually are symmetrical, wave A and wave C. So if you want to know where the price could lead, and you see that the stock, let's say that we complete here the first wave of the higher time frame, it goes down, and then the stock goes down, and then it starts to go up. If you want to know where it could go, when it's gonna go, when it's gonna start consolidate or turn for the next wave, use this length here. Okay, so basically, you know that if you take this length and you put it approx where the stock is meeting resistance and it's curling, you're gonna have where that wave 2 should be. But remember, the same applies to the higher time frame. So this first wave here, if you put the Fibonacci level on it, it should turn around. You see where I am? I'm right in between. I'll hide this one. I'll hide this one. I'm right in between 61 and 78.6, which is the reversal area for wave 2 on the bigger time frame. Does that make sense to you guys? I'm gonna copy that. I'm gonna put it in I'm gonna put it in the chat here, the stream. Okay. Okay, and then let's go back to the PowerPoint. Before we chart together, I want all of you that have TradingView open it up, okay? And I'm gonna show you where all the buttons I use are located, and you're gonna be able to have your drawing pens available first thing in the morning when you're gonna fire up TradingView tomorrow. So the first thing you wanna do, guys, here is click the star bottom left, okay? Click on it, it will pop up this here. You won't have all of the buttons I have, okay? You can print screen if you want. I can put it in the chat. This here, if you want to have the exact same drawing pen that I'm using as Eagle Chartist, you'll have it, so you know what I use. And basically, you're gonna go here and you're gonna take the drop-down menus and you're gonna highlight everything that you find here, okay? But for the Elliot wave theory, what you want to highlight is third icon, fib retracement, and then the sixth icon, the patterns, Elliot impulse wave, 1, 2, 3, 4, 5, and Elliot corrective wave, ABC. Once you have them here, you will simply be able to click, boom, 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 anywhere, and it will automatically drop. You should use the magnet mode on TradingView. What the magnet mode allows you is, if you're drawing something, it will automatically attach to the high or the low of a candle. You know what I mean? So it's very useful, and it will even reach the body of the candle. So basically, if you have a candle here, and if you want to draw, I'll be able to click either the opening session, the closing session, the highest point, and the lowest point. And if I click, it will automatically magnet. You know what I mean? So it's really, really, really useful when you're drawing Elliott waves. So that's it for the drawing pen. Now back to the presentation. Do you have any questions, or you want me to go with real-time charting and requests from you guys in the stream chat? Don't be shy. I'm here for you guys. If you have a question, do not hesitate, guys. I'm here for you, and it's quite tough to get it in your mind on Wednesday 9 o'clock. Okay, I understand that. So take advantage of this session. Do you mind checking Apple? I do not mind checking Apple here at all. I'll be happy to do it. And what I'll do is I created a new chart here. And what I'll do is I will hide all of my indicators. Okay. And we are going to draw from nothing, our Elliot waves. You guys are ready? Let's do it. So Javier asked for Apple. Okay, so basically I'm gonna flush everything here. I know exactly how to retrieve that. Remove 14 drawings. All right. The only thing I will do to ease up your reading, guys, is I don't want to have any color for the up candles, and I want deep black for the low candles. Okay, it's gonna be easier. Okay, so let's take Apple. Okay, what you want to watch is long, long, long. You always do the same. Okay, when you do Elliott wave, always start from higher time frame. So we are gonna start from, let's say, the month or the weekly, and we are gonna work our way down to the daily, and that's it. I do not use the Elliott wave below the daily time frame. Now I know what you're all asking yourselves. Can you? Oh yes, you can. Elliott waves can work on 5-second charts. The only thing is that it's way too damn fast for human to make all of that, okay? I use different strategies when I come to day trading and smaller time frames. And I'm available if you guys want to have private session. I can show you what I use. And some of you already know is it the ARB strategy, and I use momentum and volume strategies for intraday sessions. But when it comes to Elliott wave, since I use it as a prediction tool, it's only for higher time frames for me. So daily, weekly, monthly. Okay. Now we have Apple here. Okay, we got Apple on the weekly time frame. And always remember, guys, we are gonna draw stuff. Elliott waves works with, I would say, almost every stocks, but it works better with high liquidity stocks, and especially highly algorithm traded stocks like Tesla, okay, like oil, like stuff like that. And when I say stuff like that, is because with experience, I know which is trading is responding better to Elliott waves. And if for a reason you find a count and it breaks below the wave 2 that you found or something like that, it doesn't mean that the Elliott wave doesn't work. It means that the count was no good, and you have to zoom out and you need to find a better count. Okay. There is not only one count for given stocks. Okay, so Apple. I'm looking for bottoms first. So basically, everything that is before 2007, I don't really mind. Okay, I mean, we were in between $3 and 0, so I don't mind. Let's zoom in. And what I want to find is what could be our first wave, okay, to understand the behavior of the Apple stock. So I want to find everything that looks like a bottom with a decent retracement, okay? Everything that has a bottom with a decent retracement. Let's go on the monthly. It's gonna be easier to spot. And if we, as I said, we forget everything that is between below 2007, since it was pretty flat. Let's take the fib tools here. Let's take the bottom here on 2009. And let's go to, let's say, top of this high here, okay? This top here. We make wave one here. Let's pretend. Remember, we are looking for waves, guys, okay? So we need to find it. If I had put it here, I know it would not be a first wave because that's way too high for retracement. So if I go here, the retracement is around 50%. So everything that is below 50% could be a wave two. But remember, I said in between 61.8 and 78.6 would be a better, I would say, theoretical area for a turnaround, okay? So if we move our cursor, either we leave it here, it doesn't change anything in the count, okay? It's only a matter of when we are gonna do predictions, it's gonna help us. So if we move it to this low here, okay, there was a candle on that month that dropped like 30% and it made a hammer. So this is a very interesting candle, okay? The retracement here would be exactly around 61.8%. So that would give us a good area to start our suppositions, okay? This could be the wave two low. Now I want to zoom out. I just want to see if I started it before, would it make sense? You see, if we started it before and we took the low, like the real low of Apple, anywhere I go, the real low, this retraced exactly to the penny, 61.8%. So that would be, if you ask me, this is a lot more solid, okay, than this, because this is a real low and this was a projected low to see where the fib would make sense. So this is, to me, this is no good. So that would be a first wave with a perfect retracement. And when I say perfect retracement, this low here is at 279 and our low here is, if we take the real low, 277, okay? So we are 2 pennies. So this is quite precise, okay? Okay, so we are on the monthly chart, right? Now we know that this would be the third wave, which is obviously huge. This is a huge wave three, okay? So sometimes you will understand that it's hard to chart on the monthly basis, but that would be wave three. And then if you tell me, yeah, but I see nothing on the screen, remember guys, I don't care. We know that this should be the wave two low, so I don't care now. Everything that is before that, I don't care. Okay, this is our wave two. So I'll just draw it here. Wave one, wave two. That would be maybe wave three, maybe wave four, or not even. We are gonna see what the Elliot wave tells us, okay? Okay, let's work from that wave two. Perfect count. Fib, if we take this high, does it make sense? Well, what I said wave four should correct in between 23 and 38.2. What do we have here, guys? You gotta say it went a little bit below. Okay, come on. It retraced exactly in the right area. And remember, wave 4 is below Fib 50. Wave 2 is below Fib 50. Wave 4 is above Fib 50. So it's still above, and we are right where I predicted it would turn around. Now the question is, where could wave 5 go? Well, if you use the Elliott wave theory, there are a few points of interest in where the price could go. Okay, just put yourself back in 2018. This here doesn't exist. Okay, it doesn't exist. So everything that I will put gray here does not exist. So the only way I could have identify the turn while I see the turning here, I know that I'm in a wave 4 and I want to know where Apple could go, would be either the extensions of the impulses driving that retracement, or it could be the length of either wave 1 or wave 3. Okay, so basically what I would do is I would say, okay, could it be the length as a prediction? So I draw the line here, I take the line and I put it here. That would have been here on 2022, and I would probably have given 113 price target on Apple. That was the available data. So that would be one possible target. Okay, let's remove this one. And then you have the extensions of this wave. And those extensions should meet at the exact same level that we said. So I'm just gonna draw a new one, just because I don't want to re-click everything, and I'll just draw it backwards, so from here to here. And I know that in TradingView, it's gonna give me all of the stuff above one is automatically generated in TradingView, so I don't have to retype everything. So I can have the 1.272. I could have the 1.4. I could have the 1.61. I could have the second, like 100% above. And then you have the retracement based on the second and the third, well, 200% at 300%. So you have it here and you have it here. And guys, I want you to be very, 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 very careful here. We draw that from nothing. Let's remove this one, this one, this one. So we have a few points of interest. This one, this one, this one. Look at the fib extension over 300. And look where the price turned around 3 years later. If you guys think that this is a coincidence, stop trading, okay? We had a high, all-time high of 182.58. And we had a prediction of the third multiple, which is, let's agree, a hell of a run for Apple, that landed at 183.96. So if you do the math, someone that would have used the exact same strategy than me without any of these candles on February 2019, knowing that the stock bounce of a perfect wave 4 area following a perfect wave 2 area, you would have put 5 target prices, and in the super bullish COVID crazy run would have reached that extension over 300 to the penny. So just imagine how many computers with algorithm were coded to sell along the way at the retracement level I told you. Let's see if some of these sell-off make sense. Maybe they don't, maybe they do. We got the over 200 extension. It did turn around, but I mean, it's not to the penny. If we go to 41, oh, 41, look at that. Look at that, guys. Are you still going to tell me that this is a coincidence? Okay. The 41.4 extension is 81.25. And the high point here is 81.96. So we are about 60, 70 cents off that high. This is no coincidence. So you had algorithms that were coded right here. You had algorithms that were coded at the 2.72 that we had right here. And we probably had, yeah, all of the levels at the end, except this one. All of the levels had a very nice previsibility. So probably that all of those interest point, there's, I think, 8. There were selling orders at these 8 levels, and this is why you see these boom, 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 all these sell-off and retracement and buying back. And what is very funny is, once again, we draw from nothing. And what do you think you have here? 1, 2, 3, 4, 5. And just by the eye, I know that everything I just draw, okay, so we just draw this Elliott wave. Let's watch the levels together, okay? The retracement, just to see if it makes sense. Back with our regular fib. What I said, fib 1 should retrace at 61.8. This is not even exact. This is, I think it's, I mean, it's 10 cents. It's insane. Okay. So perfect retracement here, wave 2. Let's see if wave 4 makes sense. Is it in between 23 and 38? Exactly. And then we get the 5th wave. And where have the 5th wave landed? Was it an extension? Right below the 61.8 extension. So you guys need to understand that Elliot wave is not a theory that works or doesn't work. Elliot wave is out there. It's only a matter of, are you going to use it or not? Because it is a bit complicated to assimilate, but it is out there. And I mean, we started the chart from nothing, guys, and we've proven it on every single level. Does that impress you or not at all? Now I'm gonna need another ticker, guys, okay? Give me something different. We did Apple. Don't give me Tesla or another tech stock. Give me something else. XOM is oil. Oil is tricky, okay? It's tricky with the Elliott wave because it doesn't have huge impulses when you say on a very, very long time frame Oregon. So I'm gonna give you information here, write it down, but I won't be able to give you long-term perspective because I know that you want to make money faster than waiting 40 years, okay? So this is the monthly chart for XOM, okay? Let's take the real bottom right here on April 1970. None in here were born. And let's go see what could be a second wave. I took the bottom. I want to find the top. But the question is, do I want to take this real all-time high? I don't. Because this guy, this could be, what could be this here? Can someone tell me in chat? That thing right here. What could this be on the monthly time chart for XOM? Thunder, hit me. No clue. Okay. So this could be wave 3 because we made all-time high, meaning that we could be just going higher here. So if we take the here for wave 1 top, where have we retraced? What a surprise. Right in the 61.8 and 78.6 area. You guys think this is a coincidence? Okay. And do you think that this ABC correction is a coincidence too? Well, if you follow the strategy here, boomstick, oil right now is making the third wave. And this should be its trajectory. So bottom line, I would predict that by 2064, so that's in 40 years, it should be around, XN should be around 130. You're gonna say, yeah, that is very not high. I totally agree with that. It's just the beginning of what the predictions could be. But what is more important is that I don't care here. I won't be trading in 40 years. I'll probably be close to dead. So what you want to know here is that since we are building wave 3, this is building the same pattern, wave 1, 2, 3, 4, 5. So what we got here, this does look like 78.2, something like that retracement. A wave 3, and now oil would be making its low, and then would do the final move up. Okay. So if you ask me right now, oil could retrace in coming future to, I would say, in between 23 and 38. So it could retrace somewhere here before going on with the longer time prediction. And remember, wave 3 is the most impulsed. It's the one that will keep going like Apple for a long time, and it will be very aggressive. So the 5th wave here could be very high, and it could be very long. So it could reach extensions. My first bet would be 168. So I would not take the easy way to say the wave 1 length. I would prefer to use the extension here to try to say where it could go. So 170 would be my guess, and I would say before 2030, something like that, since it's more aggressive. And yeah, that would be it. AA. Sorry guys, I need to cough. You guys hear me? Sorry, I had a problem with my headset. Okay, so now I'll go with Alcoa Corporation. What do we have here on the monthly chart? This is pretty aggressive movement. Damn. Okay, let's try it. Way below 78, so I don't like that. I don't like the count on it. That would not be a first wave that I would try to replicate. Because it retraced almost to 0. So I don't really like that. It's almost impossible to use Elliott wave theory on a stock that reached from $3 to $100 and went back down to like $5. The retracement is it's too big to be valid for me, Thunder. But in the theory, it would still be valid as long as it doesn't go below its lowest point in the historical data. So basically what you could do here is clone this line, but it won't tell you much. It will only tell you that instead of starting from 381, you would start from 552, and you would minimum reach 111.40 for its next wave. So it doesn't give us much hint, American airline here, okay? The only thing that you could predict is, let's say that we break 109.69. So let's say that it break all-time high. My guess is that it would reach the 61.8 extension at 175.13. I would say following the same pattern, okay? So the line here, I would try to line my target along with it, you know what I mean? So that would be the only way I see I could give you good information, useful information on Alcoa. And I don't see how this is relevant because it brings you way too far in the future, you know what I mean? So I would not trade Alcoa for sure, except if for any reason you're aware of any cyclical event for the corporation that leads to these booms. That would be the only way I would trade that. Can you do TCNNF? This is going to be the last one. We are already at the 1 hour 20 minutes, guys, and I'm starting to lose the voice. So it's gonna be it for tonight after this one. TCN, okay, it's Cannabis Corporation. Yeah, we can do that. Let's put on the weekly chart. What you need to remember of what I said, Ryan, is that with every crazy first wave comes the equivalent retracement, okay? So what I would like to see here is a retracement between 61 and 78. It broke below that, okay? This means that as of now, this is not following the Elliot wave theory. So this is not following the Fibonacci retracement. So these are not highly traded by algorithm. That would be my conclusion, okay? Now, could we use it for trying to find anything that would give us a hint on if this is going to zero or if this is going or where this is going to reverse? In all honesty, Ryan, here, Elliot, I would not use Elliot. I would use historical data and patterns to try to find a setup that would make sense to me, okay? So if I want to see how this could turn around, the first thing I would do is I would not touch that stuff before it reached 574. This is pointing to, this is really pointing to all-time low retest, okay? So I would not touch that until I see how it responds to this line. And from there, I would only touch it If it breaks, it's downtrend. So basically, if we break above this line, I would put an alert. If we break above this line, I would start looking at it. If we bounce off this line, I would start looking at it. And basically what could happen here is sideways for weeks, retest, test, try it here, breakout. Then I would start looking. I would enter on the retest of the trend line, and then it have a chance to pop. So that would be the exact strategy I would use if you tell me that you really want to play the stock for a given reason. This is what I would use as a strategy. No Elliot, only trend lines and pattern following. So, just before we go, I just wanted to show you guys the SPY chart, because I have a lot of questions on my Elliott wave theory. And people are asking me where it come from. And I just wanted to highlight you guys. If you do the same exercise as we did today for Apple, you pull out the monthly chart on the S&P 500 from all-time lows of 1994, you will find a top at year 2000. You will find a perfect retracement at the year 2209 for the second wave. And you will draw the third wave at the top of the beginning of the year, this year. And you will find the area where I said we were going. That is the area in between 23 and 38 fib from this impulsive wave. And let's be honest, I posted that chart on Feb 23. So we were here, and look where we are going. So if you think that this is a coincidence, I don't know why you are still in the stream for tonight, guys. So algorithm computer are out there, they are trading the market, and you better work with them. That would end up the Infinity stream tonight, guys. I want to thank everyone. I want to remind you guys that I'm always around. If you have questions, if you want to show me your counts on given stocks and you want my opinion, I will gladly give it to you. So do not hesitate. And if some of you want to take their trades to another level, either intraday or using the Elliott wave theory, you got a bunch of good traders at Eagles, guys. You should use them, and instead of trying to time the market or trying your luck on lotos, you should definitely invest in knowledge, and I highly recommend it. It would be the best investment you would do. So do as you please, and I really hope you like the stream tonight, guys. I'm sorry for the voice. I did my best, and I hope that you're gonna practice your Elliott waves, and especially that you're gonna go back, get the PowerPoints, and make the best out of it. So I thank you all. I thanks all of you, and I'll see you around.